Hello everyone, this is Wayman and we are back for another series of the Beginner Forex series, and today we'll be looking at topic 7, which is trading psychology, and this is very crucial in trading. If you're going to do Forex trading, one of the biggest challenges you'll face, leave alone the capital bit of it, is the trading psychology bit of it. The trading psychology bit of Forex trading. So, what is trading psychology? Okay. Trading psychology is the mental and emotional state that influences trading decisions. It's your mind, the games your mind plays with you when you're facing the charts, when you're facing the markets. Okay. And you know what they say? It's not the strategy that fails, it's the mind behind the mouse. Yes, you know, the mind behind the mouse, it's the mind that gives you that adrenaline shot to click the buy, to click the sell, to close the trade. It's still the mind that will delay your hand from clicking that mouse to also close a losing trade. Okay, psychology is just a game of the mind when it comes to trading. So it can make or break even the best strategies. The mind is one of the biggest battles you'll face in this industry of Forex trading. Okay, why does trading psychology even matter? These are some of the challenges you face because of trading psychology. You will close your winning trades too early because fear. It is going to reverse back to your entry position or go back to your stop loss. And then you let your losing trades run because you have hopes it will start going in your direction. You've entered sell trades. Your stop loss was 20 pips, but the market has gone 30 pips into losses, and you've not closed the trades with this hope of, I just hope it comes back. You've seen people literally sing for the market. People sing. Some even say, if you come back to my entry, I will get out. It even gets to a point you even tell God, let it just come back to -$5, I'll close. And even when it comes back to -$5, you still won't close. You'll have hopes, okay, now it's coming my way, I'll have to live with something. Okay, then revenge trade. The market has hit you, you've lost $100, and you want to get back at the market. Anger. Also over trading, you stay on the screen for too long. Of course, you'll be forced to click the buy, and you'll be forced to enter trades. And then when you abandon your trading plan, you have a trading plan but you're not following it, because usually most times by the trading plans, they take time. Okay, these plans, their structure is in such a way that they require time. Sometimes you might not get a trade in a day, but you have too much time on the charts. You want a trade, you want it, you get. So mastering your mind is key. You need to own your mind. You need to be a master of your mind. So key emotions that affect traders, we have fear, greed, overconfidence, revenge trading, impatience. With fear, of course, it's fear of missing out. You fear you'll miss out a trade. You fear it will come back to your entry. You fear it will come back to your stop loss. And then greed, you're 100 pips in profits, you don't want to close because you feel like you're commanding the market's move. It's going 500 pips. You're 100 pips in profits. Close. Then overconfidence. I trade SNR, so nothing can go wrong. I've read the markets. I know these things. I know price action. I can't go wrong on these things. That mentality. And then also revenge trading, like I explained previously. The market hits you, you want to get back at it. Then impatience. Yes, the market has given you a directional bias. It's in your zone, it's in your area, but You're waiting for your lower time frame confirmation to enter trade, but your mind is telling you just enter, the confirmation will find you in. Then you pay the price, and it's usually hefty. So we are explaining the key emotions one by one. Let's start with fear. Of course, under fear we have FOMO. If you're a Forex trader, you will definitely come across this word, FOMO. FOMO is the fear of missing out on a trade. Like, it comes to your key area, your key level, and then you fear you might miss the trade if you don't just trigger a buy or a sell, if you don't trigger a trade. That is bad. See your confirmation and then enter. Then fear of losing money. This fear of losing money makes you fail to execute a trade. Okay? The market has given you your confirmation, but you fail to execute. You're fearing to lose money. Also, fear of pulling the trigger. You're scared to execute a trade because you're scared of how it might end up. Yeah? Now, how do you fix this? Use smaller lot sizes, trade with a plan, and accept losses. I'll tell you, if you trade with smaller lot size, it will even be easier for you to accept the loss, because you might just lose 20 pips stop loss. You've lost maybe $4, $2. It's acceptable. And with time, you will get used to it. And then greed, staying too long in the market, over leveraging. Okay, you have a small account, but you're pumping trades. That's bad. Okay, just set targets, focus on small consistent wins, and with time, the time when you get a bigger capital, you'll be able to make the bigger swings. And then overconfidence, of course. You've had a good winning streak, the week has been good for you, then you start over trading. Just stick to your trading plan. Let me tell you this. If you come to the market and then you get if your target, for example, for a day is 100 pips on gold, if your first trade for that day gives it to you, just leave. You're done for that day. Leave. Maybe if the first trade hits your stop loss, also the second one, you can take 3 trades. If you're taking trades of 20 pip stop loss, you will lose. You're risking 60 pips. So if you lose your first 2 trades, you've lost 40 pips. If the third one wins, that's 100 pips. You've made back profits. Yeah? But if the first trade wins, leave the market. Just go. You've won for that day. Stick to your plan. Then revenge trading. So emotional reaction to loss. So I don't need to explain much. You need to know that Forex is not easy. The markets will humble you if you prove to be stubborn. So don't revenge. If it hits your stop loss, if you lose money, ask yourself why. And if it's because of your negligence, you know the problem. Solve it. But if the market hits your stop loss, even after you have a good confirmation, then you need to find out why, because that will be a learning opportunity. So, how to fix revenge trading? Step away, cool off, review your journal. Just that. So, impatience also. You don't want to wait for your confirmation, so you force trades, you close trades too early. Okay? Then here, just wait for high quality setups. That's all you need to do, high quality setups, and you execute. And then these are the psychological tools to master. You need a trading plan. The best of them all is a trading plan. You need that plan. You need to journal your trades. Then you need mindset training. You need to accept losses, and it's easy to accept losses when you risk small for the start. Then detach from money. By the way, if you enter trading with the need to make money, you will not be satisfied with yourself. But if you look at money as a reward for the work you're doing, then Forex trading will reward you abundantly. Common psychological pitfalls. So FOMO leads to late entries. Okay? And then overtrading, too many random trades. Doubting strategy, constant switching. You move from ICT to SMC to SNR to what? Then unrealistic expectations like quick riches mindset. That is not in Forex trading. If you come in fast, you will leave fast. Trust me on that. So these are the pro trader mindset tips. Think in probabilities. Take responsibility for your actions. Pre-process focused. Detach from outcome. Rest and recover. Trust me, if you do this nice and easy, it will become so simple, so easy, and you will enjoy the process. Yeah, you can master every chart pattern, but without mastering your emotions, you'll always self-sabotage. You will be the reason for your downfall. Not your trading strategy, nothing else but yourself. Thank you for watching. Join our community on Telegram, and I'll see you on the next one. Thank you.